So, is Facebook really an easy double? Recently, there has been a huge deal of online chatters going on after Monish Pabrai's comment regarding Facebook as an investment. So for those of you who are living under a rock, I'll be playing a short clip where he actually commented about Facebook as an investment vehicle.
What I found extremely compelling about Facebook, I mean, when I look at the shirt I'm wearing, this shirt came from an ad Facebook served. And I have about 20 of them. And it's the only shirt I wear. And I mean, I pretty much redid I'm wearing shorts. You can't see my shorts, but I have only one type of shorts, which also came from Facebook. And these are brands that I would not have found. So pretty much if you look at almost everything I'm wearing, it actually originated. So I think their ad platform is incredibly good at targeting. I mean, just literally, the kind of stuff I get served up is amazing. I mean, literally, like they can read my mind, and I think we've seen that, and some of that got hit with the Apple privacy issues, but it's been right on. I think it's been just incredible. So I found Facebook very useful from content being served up, which was, generating revenue for them, but it was very relevant to me. When I look at Reels, I do not find the ads relevant. The real ads are like me watching, broadcast television, some beer ad being served up or whatever else. And I don't drink beer, I'm a teetotaler. And so I find that they're targeting on the Reels for whatever reason. It might be that videos is a kind of different, kind of universe of what they can serve up. But it seems to be quite a ways off from. So I actually find when I look at Reels, it's irritating. The ads are irritating, and actually I actually find the loading of the ads pretty high. So that's a negative. On TikTok side, I don't think it's about the videos that they're serving up. TikTok's and ByteDance's claim to fame is the incredible AI engine they've got on the back end. And what they are doing on their short form videos is what Facebook is doing on their newsfeed. They are right on. In fact, when I talk to friends of mine, they feel TikTok can read their mind. They feel TikTok knows what they want and serves that up in that format. So they seem to be ahead. My situation when I look at Facebook is that I see a company that revenue is not going anywhere. Their cash flows are not going anywhere. I think those are pretty solid. I think the user base is pretty solid. So if I were to look at Facebook, I would say that even with 5 or 10% annual growth, which doesn't really seem like a big leap for them to get to, the stock ought to be a double at current interest rates. So I don't have any issue with saying that, Meta in 2 or 3 years is an easy double. I think that's a reasonable bet. When we look beyond that, if you're looking for something more than a 2x, I tend to be skeptical because the way my mind works, everything related to Meta is an option I'm not willing to pay for. So whatever they're spending on Meta and whatever they're claiming, in my opinion, I don't think Facebook themselves understand what Meta is. I think they throw a lot of words around, and I think we will, as a society, maybe in 5 or 10 years, have some semblance. And
of course, who is Monish? And why would you even listen to him? But do you know what you should listen to? Listen to my demands and smash that freaking like button, of course. So for those of you who are even remotely interested in taking up a position in Facebook, I think you should spend the following 1 hour to watch through the entire interview and the entire podcast. Link in the description, but of course after my video. Now, in that short clip, Monish did raise a few valid concerns, which I seek to reiterate and also address with my own opinion. So, if you were to look at the price chart for Facebook over the last 6 months, at its highs, Facebook was trading over $382 just September of last year. I know talking about historical price can be a very sensitive issue, especially when people are under the impression that, hey, just because the stock has crashed 40% means that it might be cheap or it can even mean undervalued. So I think the bigger message that I really want to get at is really Facebook's previous versus its current valuation. So at a $220 stock price, Facebook has a valuation of around 600 billion, give or take. So if we were to extrapolate back to its past valuation, it was commanding a market cap of slightly over $1 trillion at $380, give or take. Now, when Monish says that Facebook is an easy double, that would mean that Facebook will fetch a $1.2 trillion market cap. Now, if you were to really think about it, is it really that hard to conceive Facebook at that valuation? In comparison, Apple currently sits at 2.8 trillion, Microsoft at 2.25 trillion, Google at 1.8 trillion, and Amazon at 1.6 trillion, while Facebook trades at a measly 600 billion. Of course, I'm not claiming that everything that is spreading online are FUD, fear, uncertainty, and doubt. You really think that the market doesn't know a thing or two, and we are all the smart ones while everyone else dumping are dumb? Let's not kid ourselves. So to drive home the point in one sentence, Facebook lost its story. Simple as that. Every other big tech companies out there still has a strong and compelling story, which are reflected in their current valuation. So to reiterate Monish's sentiments, I think Facebook is really an easy double, but the timeline might be a little sketchy, especially when I'm not as optimistic about the near-term outlook of the market today. However, there is a huge caveat in our discussion here. I believe a majority of our analysis is contingent solely on Facebook's core business, mainly Facebook and Instagram. So to many of us, the metaverse/Oculus segment is just like a call option. If it works out, congratulations to all Facebook shareholders. If it doesn't, we entrust the management's capital discipline to know how and when to pull out. Get it? Anyway, if we were to study Facebook's track record on the basis of simple metrics such as return on equity or return on invested capital, it essentially has a stellar report card. We have nothing to complain about for the last 10 years. So I don't think that's a very hard ask. Here comes the big problem. Many people are essentially worried about the projections forward because the market is always forward-looking. Sure, you did near 40 billion in free cash flow last year. What about the coming 5 or even 10 years? Heck, we don't even need to look too far. Just 2022 alone, expectations are being trimmed down by a large extent due to both competition and changes to Apple's policy. So the fact that management only gave a guidance of 3 to 11% growth moving forward already illustrated the expected impact of the impending headwinds surrounding Facebook as a company. So to suggest that Facebook will start experiencing negative growth is a tad bit too pessimistic. Yes, from a 40% to single-digit growth is just horrendous, but I believe that the biggest difference between bulls and bears of Facebook is contingent on whether they believe that the management is able to adapt to these changes and provide with an alternative to skirt all these different headwinds. So if they're able to invent a post-privacy ad attribution model effectively, then kudos to management and shareholders. And on the flip side, if they can't turn this around, then it was nice knowing you. Given that we just use conservative projections for the company, it's not too hard to fathom a doubling in valuation from here. Here comes the kicker. Why, despite it being an easy double, investors are still staying away from this stock? I think the first most obvious reason would be despite knowing Facebook currently trading at an extremely cheap valuation, the timeline for the rebound is unknown. Secondly, like Monish puts it, investors are highly skeptical of Facebook's trajectory moving forward. So the question then becomes, so what happens right after Facebook doubles? Essentially, many investors want to pick winning companies that are able to exploit the long-term compounding effects. So the current metaverse push is iffy at best. Hence, not many people are excited about this company, and by translation, not piling money into this investment. Very much so like Alibaba and the entire basket of Chinese equities. So to concretize the point, Facebook lost its growth story. Anyway, what do I even know? I'm just sharing my own perspective about this company. I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!